Welcome to the Daily Exchange. We're back. We're here talking with Aleks from Amber. Bitcoin and Bitcoin Cash are absolutely melting down. And we're going to talk all about that, the fork. And we've got some weird and wacky new crypto bot pages and to talk about as well. So you guys are right after this. Welcome back, guys. I'm here with Aleks from Amber, the Roundup app, cryptocurrency Roundup app. Aleks, welcome to the Daily Exchange.
Thanks, man.
It's awesome to have you on the on the dial,
on the show,
setting it out down the phones. Now, there is an actual crypto Cyber Monday sale going on right now. Cryptocurrency has gone down, what you would say, I think 25% in the last week.
It's a great day.
It's on sale. We are on sale, 60% off. No, 25% off. Bitcoin's trading at, I'd say 4,799 almost. Yeah, we've got Ethereum at 148, Ripple at 48 cents. Ripple has, I gotta say, sorry, XRP. There's
a difference.
Sorry, major difference between the two organizations.
There's a difference, yeah. We're at Cybos 2 weeks ago, 3 weeks ago, and we actually met with Ripple Labs over there, and we started asking about XRP, and they sort of just made it clear. They go, look, we are Ripple Labs, and we've inherited all of this XRP. And they go, some of us, think that it's a good idea, some of us don't. But what they're doing is what Ripple Labs is doing has very little to do with XRP, and I think this is where a lot of the confusion comes from. People think that Ripple Labs goes out and scores a contract with a bank, and in some way, shape, or form, that's got a relationship back to XRP, which it doesn't. XRP is like purely this speculative, weird thing. And the thing is, if there was a relationship between Ripple Labs and XRP, Ripple as a token should remain steady in price because no bank or no one that they're selling it to is going to use it if the thing is fluctuating. It doesn't make any sense. I don't get it.
Well, Ripple's only down 5%. Bitcoin's down 12.8%. Ether down 16%. EOS down 10%. Litecoin down 12, we'll say 13%. Ethereum Classic.
What a classic.
It's down to $6.27. Joel, when were we talking about Ethereum Classic? How many episodes did we talk about Ethereum Classic? And now look what's happened.
So many episodes.
So many episodes. Stellar is a bit of a favorite, still 22 cents. Neo, ooh, Neo, so spicy. Really spicy, $10.30. Aleks, would you say you're a bit of a bull or a bear trader?
Definitely a bear trader.
Bear trader.
Yeah, I started my life in financial markets in 2006, and call it 2006, I found a broker back in the days when you would call a broker and they would place a trade for you. And some dude at Bell Potter, he convinced me to invest in some biotech company. And I put all my scholarship money in there and I lost a bunch of money. And that was the last time I went through like a traditional broker. And since then, I was just trading options and warrants, sort of taught myself. And I was a major bull going into 2008. Thought I was a genius and I lost everything. And since then, I've definitely been, look, I take a position, it's more often bearish than bullish.
Gotcha.
Yeah.
All right, I guess one of the updates happened yesterday. The HODL ETP, not ETF. I was corrected unusually about this difference in an ETP and an ETF. For some reason.
They're similar.
Very similar.
Yeah, similar. Yeah.
An exchange-traded product as opposed to an exchange-traded fund. I'm a little bit confused with the difference, but I'm working on that. I guess it's a financial product and allows a lot of people to enter the market. The thing is, there's been an ETF live in Sweden for ages.
There's actually, I mean, you got the ETFs, right? But then you've also got all these guys like Crypto20 and all of that, which I know they're not traded on normal markets, but even on Saxo, there's actually an instrument that tracks Bitcoin anyway for anybody to buy. So there's, I don't know, that one's not blended though, it's purely Bitcoin.
Yeah. Okay, so the interesting one, so this consists of 5 coins, Bitcoin, Ripple, 25% Ripple.
No, XRP.
Sorry, XRP, thank you. Thank you. XRP
Correction.
and Ripple.
Correction.
Absolutely nothing to do with each other at all. These are completely different entities. One just owns many $billion worth. Well, I'm probably 45% of that now.
Yep.
But 17% Ethereum, 5% Bitcoin Cash.
Well, which one do they own now?
That's
probably
interesting.
both.
That's interesting.
Maybe. BAB.
3% Litecoin. And they rebalance these monthly to stay on top of the developing markets. That's a pretty interesting exposure, right? How do you think this is going to affect cryptocurrency? Like, how do you think it affects prices?
I don't know, man. Everyone talks about diversification, and the whole point, diversification came up as a concept of creating a portfolio of assets that are uncorrelated. So let's say, for example, stocks, some gold, some treasuries, some bonds, and all this sort of stuff. The problem with creating a diversified crypto portfolio is cryptos aren't uncorrelated. When one goes down, they all go down, and when Bitcoin goes up, they all go up. So diversification in crypto is a really, I don't know, pointless idea in my mind. At least at this stage, maybe 5 years from now, when the markets are a lot more larger and more liquid and all that sort of stuff. But I don't know. So look, at the moment, I mean, this gets announced, then the market dumps 20%. So I don't know if it's got any bearing. So
I have a very strong view on the market, and I'm going to put it out there.
Hit me.
And we're going to move on from the ETF, because I think ETF, this whole decision and things like that, like buying these underlying tokens, I think is good. Sure, let's see what happens. But I think when it comes down to it, here's my take. I think what's happened is we've had a lot of news in the start of the year, and then everyone was like, "Wow, these ideas are going to change the future." But today, right now, what is the difference to me between Ethereum, Ripple, Bitcoin, or even Bitcoin Cash, regardless if it's still middling around? Like, one has smart contracts, sure, but at the end of the day, right now, what can you do with Bitcoin, Ethereum, or any of those others that you can't do with one or the other? To me, I don't see any difference.
Nobody cares. That's the thing.
No one
Nobody cares. No one cares outside of the crypto people. That's the thing. And all we do is quibble and argue and fight amongst each other about who's an idiot and who's smart and all this sort of stuff. None of it matters. And there's the thing, I spoke to you earlier about that book by Yuval Harari, The Sapiens. If anyone hasn't read it, go and read it. It's got nothing to do with Bitcoin or crypto, but it'll teach you more about why Bitcoin and crypto actually exists than anything else you'll ever read. And the whole concept of it is he talks about why we as Homo sapiens or as humans have gone from like some random ape in the food chain to the top of the food chain. And it's our ability to cooperate in large numbers in a flexible way. And what money is a way that allows us to cooperate. It allows us to trust that you can board a plane and trust the pilot that is going to fly, because we've been able to build all these social constructs, and money is one of the underlying pieces of it. So the predicate for money is trust. The problem is crypto hasn't been around long enough for people to trust it. And so what's going to happen over time is money or value needs to accrue in that network, and it needs to be around long enough for people to trust it, for it to become a real asset that people outside of the crypto space believe in. So at the moment, it's all a bunch of infighting in this small little network that's like a drop in the ocean compared to everything else.
So my long-term view, but I think Bitcoin as a concept, and as the longer and longer it goes, the Lindy Effect hits in even harder. And I think that's very strong. 100%. But I think today, right now, when people look at cryptocurrency, they don't have any FOMO. The news is not creating FOMO. We've got enough protocols to make our little dice gambling apps. And that's a fact, right? That's just where we're at. I don't think things are going to change dramatically from here right now, today. And so people look at that and they trade on that, and they're selling because of that, right? They've lost hope.
Yep.
And so I think that's why we're going down. But that's not financial advice.
Yeah.
No financial advice. We don't give financial advice on this show.
Look, I think the only game in town. The only game in town is accumulate we have the ability to accumulate a digital asset that is self-sovereign, and it's a bearer asset, kind of like gold. I always give people the example. Actually, take this example. Picture buying Bitcoin is like you're buying a unit on this limited network, kind of like buying domain names. If you bought www.australia.com 30 years ago, you probably could have picked it up for $10 because no one gave a crap. Like it was the internet. Who knew what the internet would look like? Now try buy at www.australia.com or any .com for that matter.
Like finder.com?
Yeah, exactly. How much is it going to cost, Fred? Tell us. But it's the same thing.
We paid 300,000 US for that.
How long ago was that? What?
Maybe 3 years ago.
Okay, interesting. Yeah, okay. So that's what. But it's digital property, right? There's only one of them. So it's the same thing with Bitcoin. Is you've got, if you hold the private key to your Bitcoin, it represents an amount on a limited network that nobody can manipulate, nobody can touch. So it's much like gold. So if you look at all of this smart contract stuff, all of this other stuff that's going on is just noise. If we cut it back down to the basics, it's a new asset class.
Yes.
It functions much like gold. It's uncorrelated to other asset classes. Internally, it's all correlated, but it's uncorrelated to other asset classes. So a prudent person, and again, not financial advice, but a prudent person should say, all right, if I've got real estate, if I've got stocks, if I've got some bonds, maybe I should allocate a small part of my portfolio to this uncorrelated asset class, which is really low in value, because the possibility of it going to zero and disappearing tomorrow might be high, but the possibility of it being 100 or 1,000x what it is today is also quite high.
I agree. Bitcoin currently trading right now, guys, at 4,000. It just ticked up, $4,804. This is the lowest it's been since October 18 last year. Interesting. Year on year, we're kind of down. Omar Godbull from CoinDesk saying that if we do break further, he thinks 4,100 might be the next major support. Ethereum, we've got some interesting news there. Again, Ethereum's gaming attempts have been very interesting. And I think this one's very interesting because it's a PlayStation game. Joel, if you want to spool up the video, because it's an RPG game where you can keep your assets. So they're on the blockchain. These are your items that you own in and of itself. So the game can't really take them away from you, right? Which is really interesting. And then I think what's also interesting is that a lot of people have been trying to do this. And it's interesting that they've actually been able to solve this with Ethereum, where I don't think necessarily it's about the speed necessarily of these trades.
No, it's got nothing to do with that.
Yeah, but I think Ethereum definitely has shown, again, like you can store and create contracts and do things like this. And I think these non-fungible tokens, I still think, are one of the key aspects of Ethereum that really people should stop trying to make computationally intensive things, because databases are great with those.
Yep.
But non-fungible tokens, they can be
100%.
I think they're a fantastic use case of Ethereum and the blockchain. I think this is a great example of where you'll be able to see some growth. Apparently there are versions coming out of the game Plague Hunters on Nintendo Switch and PC that are planned. If you're interested in more, guys, about the blockchain gaming, we do have an entire show with Chris Stead. He runs the GXB, and it's a new one coming out every Friday. Do switch on. It's on the Crypto Finder YouTube channel. Check out Chris's show. It's incredible. And he will be going through in detail about the upcoming show, but that is very interesting and a great use case. What do you think?
I agree. I think the three primary use cases involve some form of, humans' desire for some form of scarcity. So if you look at the digital gold idea, same thing, scarcity, limited amount.
Long term, I think a great use case, great application of the technology.
Correct, exactly. Collectibles are just another form of that. Because if you look at the very basics of what something like Bitcoin is, it's a collectible, right? What's gold? It's a collectible. There's a limited amount and you collect it. So crypto collectibles and the concept of that, I think, is one of the best, if not the best use case for this type of tech at this stage.
Awesome.
That's my 2 cents.
Bitcoin Cash, the forks right now, SV versus BCH. Oh my, Aleks is not handling it terribly well. We're gonna have to just give a bit of an update of where we're at. Okay, so high level, we've got, here are the hash rates. SV has taken an absolute, I don't know, they shut some machines off or something. I don't know what's happened. And ABC has
stopped renting them.
Stopped renting them. They were, I think SV were complaining that that ABC was renting them, right?
God knows. Someone's got more money.
Very interesting to figure out who's got the longest chain. We've got this interesting little website. Where are we? Here we are. The Hash Wars, and we've got some sound. just find this BU thing interesting, but right? The Bitcoin Unlimited, 787. It's even longer than the BSV chain.
Yeah, well, see, Bitcoin Unlimited was like what I mentioned before. It was that first version of, you know, call it Bitcoin Cash. It was this idea of larger block sizes back in, I think it was late 2015 or early 2016, and Roger sort of initially backed that. And the thing is, once you fork off a chain, like it stays there, it stays dormant. So it lost a lot of attention with the rise of Bitcoin Cash. But now what I think is a couple people have realized that, you know, ABC and SV is a complete cluster ant, and they're like, well, hold on, Bitcoin Unlimited's here. There's less contention around it. Let's throw a bunch of mining power behind it. And it's come out of the woodwork. I totally didn't see that one coming.
I didn't see that one coming either. Polonialex right now is quoting $219 for ABC, $48 for SV. SV's price just keeps going down and down. Like
What's that percentage drop? Is that 42%?
Yeah, 42% down. Yeah, that's half.
What a belting.
Wow. Wow. That's pretty spicy. Yeah, 4-hour chart is not looking terribly good either.
One red chart.
That is...
Doesn't get better than that.
Pretty intense. Pretty intense, to say the least. All right, moving on. Let's talk about Amber, Aleks. Let's really get into it. It's really good to have you on the show, by the way, as well. Cool. And just to give you a background for everyone, Amber is a micro investment app. It's a roundup app in terms of, you know, when you buy something, you buy it to the nearest dollar, and then the rest of that money goes into purchasing cryptocurrency. And obviously, you know, it's about getting your change and transacting that, which is really cool. And then. I guess the other thing is that you also have a wallet and an exchange built into the actual app itself, which is incredible. So you can store, swap, send, or sell. The currencies all in one place, which is really cool. And you also currently are founder of the Blockchain Training Institute and co-host of Decentralized Podcast, and the CEO of Fabric as well, which is a financial data and identity app. So let's talk about Amber. So what was your motivation to create the app?
Cool. Like I said earlier, I think the only game in town at the moment is accumulating some of this limited availability asset. That's it. So what we want to do is just make it simple. The only games in town, and you know, the reason we merged this concept of an exchange and a wallet together is that that's what's needed at the moment. People need better on-ramps. Like if we can go on about how cool crypto is and all that sort of stuff, but if no one owns any or no one has any, or it's too scary to get into it, the whole experiment's just a freak show, basically. It's just, you know, a bunch of us screaming and shouting at each other and, you know, watching Craig Wright and Roger Ver just, you know, insult each other. If we don't get more people involved, it's just a waste of time. So what I thought, and what me and the team have sort of developed with Amber is, hey, let's bring this concept of an exchange, which is just simple. There's all this fiat money here, all this old traditional money here, and there's this small pool of available crypto assets. How do we make it easier from money here to go into here? So obviously you need an exchange in order to do that. And then we thought, all right, what's an easy way that'll allow people to do it with low risk? Because we're talking about a really high risk, high volatility asset class here. It's down 20% in one day. I mean, for the love of Christ, you don't see that anywhere else. Maybe except for Nvidia, because they were doing graphics cards.
Spicy!
But other than that, you need to allow people to get into it quickly and simply. There's a small subset of us who are, you know, looking for 20, 30, 40% gains daily or every minute like we do in crypto. The mass population doesn't care about that. So we thought, all right, let's combine micro investing. So that way it's small change. It's money that if someone loses it, they didn't notice it in the first place. Or if it doubles, triples, or goes 10 times in price, guess what? If you've saved up small change over the year, you might have saved up $800 or $1,000. And in a couple years, what would $1,000 that went to $10,000 mean for the average person in Australia? It's huge. Whereas if they lost $1,000, it wouldn't be that bad. So may as well put your spare change somewhere that's, you know, highly, you got a asymmetric risk-reward sort of scenario.
So with Amber, I guess there's a few micro-investing apps. What makes Amber different?
Well, it's because we've combined all three of these things together. So other micro-investment apps that focus purely on micro-investing or on, you know, just like Acorns focuses on putting your money in a managed fund. And that's fine if you want to earn 7% or 10%. But like I said, crypto or Bitcoin and all this sort of stuff has the ability to be 10x, 50x, 100x. So if you're going to put your spare change somewhere, put it there. And not to mention we've got a wallet bit of thing built in there, so that way people can actually do something with their crypto.
Cool. And then with your wallet, so is that an exchange wallet?
Yes.
And then so are users storing their private keys on their mobile, or are you guys holding the private?
We manage the private keys purely because the target market that we're going for has no idea what a private key is, has no idea about security hygiene. If you ask them to store their own seed, they're going to lose it. We are catering for the next wave of adoption, the next round of people, and
then with your exchange, just so everyone can understand. So does that are you guys I guess running that exchange, or is that a partnership or something?
Yeah, it's a blend of things. So most exchanges are places where buyers and sellers come and they interact. What we've got is we've got relationships with OTC providers and miners and all that sort of stuff. So we effectively, because we're primarily a buy-side exchange, we actually function a little bit more like a broker, but we are still an exchange because people can still buy and sell.
Gotcha.
But primarily, you download Amber, you link your account, and you generally just set and forget. So you're on the buy side, and what we've got is relationships with OTC brokers. So on a daily basis, we'll figure out what all that spare change is. We'll buy whatever proportion of crypto assets people have chosen for their account, and we'll pop it into their Amber wallet, and happy days, they can do whatever they want with it.
Awesome. And right now, you guys are supporting Bitcoin and Ethereum.
Bitcoin only to begin with, actually. We've sort of scaled that back purely because of all the volatility in the market. We don't want to sort of give exposure to that just yet. And what we're going to do is make sure everyone's sort of happy with Bitcoin to start off with. Then we'll start rolling out other things as we go.
How would you decide what coins to add next?
I think volatility is going to be an important thing, number one. Number two, obviously the top 10 are going to have bearing because they've got extra liquidity. And then outside of that, we'll probably get the community or the users involved in the process of helping select what we're going to be offering on there. Gotcha.
Now with Amber is obviously big about, I guess, in terms of really about dollar cost averaging.
Yes.
Can you help our community understand and our viewers to understand what is dollar cost averaging?
Yep. Dollar cost averaging is, they say it's the best strategy for retail traders. And what it means is if you've got, say, $10,000 and you want to buy a stock, most people, what they do is they try and pick the bottom or pick the top and all this sort of stuff and try and trade their way into it. And generally what they do is they get it wrong. They end up saying, if it goes up a little bit, they're like, oh, it'll come back, it goes up further, goes up further, goes up further. And they do what they did with Bitcoin last year is they end up buying at 20 grand because they're like, oh, it's going to continue. What dollar cost averaging does, it forces you to say, take that 10 grand, split it up into components. So let's say 10 $1,000 investments and say, all right, I'm going to do this once a week or once a month, irrespective of what the price is, and it takes the volatility out of the purchase. So some interesting analysis we did about 2 or 3 months ago when Bitcoin was around 6 grand, is we worked out that if you bought 10 grand worth of Bitcoin at the beginning of the year, you would have been down like 60, 70%. If you took that same 10 grand and spread it out monthly, weekly, or daily, if you did it daily especially, you'd only be down about 16% from the peaks for the same amount of money invested in the same asset. 60 versus 16, it's ridiculous. So it does also obviously affect you on the way up because you're cost averaging in, but people can't pick tops and bottoms. It's not how we work because our emotions drive us the wrong way. In a bottom, we're most fearful, so we're selling, and in a top, we're most euphoric, so we're buying. And you're supposed to do it the opposite way around. But so what dollar cost averaging does is it takes the most, it takes the worst thing out of trading, which is emotion. It's like, all right, small amount of money or whatever it is, it's going in daily, don't think about it, and you will, it works out so much better for retail people. If you did that for Bitcoin for the last 2-3 years, you'd be up thousands of %.
Gotcha. What's coming up next to Amber? So where are you guys at with rolling out and?
We're actually we've got a beta one that's on my phone that I'm testing right now.
Awesome.
Linked my account to it this morning. So I'm going to be going around Sydney today, sort of spending money, making sure everything's functional. We'll be doing that for a couple of weeks now, just making sure everything's good. And our aim is to get it out before Christmas. So everyone should be able to, by fingers crossed, first or second week of December, be able to download it both on the Google Play Store and the Apple App Store.
Awesome. And where can people get news of this? Is this on your Twitter, so when the launch is coming out?
Well, Twitter, Facebook, and then also I suggest everyone jumps on the website getamber.io
Awesome.
and subscribes to our newsletter. We've got cool stuff on there.
And how are you guys getting Amber out there? How are you getting, marketing it? How are you getting it adopted?
Look, we're gonna. It's a community driven thing initially. I think our major market that we're positioning for is for the general retail masses, but the first adopters are going to be crypto people who are like, holy crap, this has been needed for so long. And they're the ones who are going to spread it to all of their friends and family that they told to buy crypto last year that didn't do it. Because remember how hard it was to buy crypto last year? You'd be like, signing up to CoinSpot or whatever, and you wait 2-3 weeks just to get your thing approved. Then you had to go through all of these, facial recognition, and God knows all of the stuff that you needed to do for an exchange. The average retail punter doesn't want to do that. They just want to download an app and get on with their lives. So finally, people who are in crypto now can go and refer their friends and say, hey, now you can buy crypto, and it's low risk because it's spare change, and it's set and forget. It's nice and easy.
So let's talk about Amber. And you guys intentionally chose not to do an ICO.
Yeah, man.
Obviously, there was a lot of hype around 2017. While I guess you were building your product. Tell us a bit about the decision behind that.
Yeah, if anyone's ever seen me talk, they know how anti-ICO I was, particularly anti-ICO for the purpose of wrapping a token into a business. I think that's a really, really dumb idea. And whether there was people scamming people intentionally or people scamming people unknowingly, just not understanding what the hell they were doing, it was a complete mess. And I almost I saw it all happening in 2017, and I was so tempted to do an ICO. Everyone was like, oh, you should do an ICO, I'll invest in it. And I almost sold my soul to the devil. Except what moved me out of it was I took a weekend out, I went to Byron, and I took 20 white papers with me of projects that had raised anywhere between $10 million to $50 million. And honestly, after reading those white papers and having been in traditional financial markets now for 12 years, I honestly felt like my IQ dropped about 20 points after reading those white papers. And I thought, I will not do an ICO. I don't care what anyone says. So I avoided it. And there's a couple primary reasons. Number one, when you do an ICO and you create a token, what you're doing as a team, as a group then, is you're trying to manage an economy whilst trying to build a product here. And the problem is that startups are hard enough as it is. You've been in business for how long now, dude? You know how hard these things are.
Like 17 years.
There you go. Trying to run a startup and build a product and build a company which is complex enough on its own doesn't need you to try and worry about running a token economy on top of that and trying to make sure that your thing doesn't pump, dump, get listed on exchange, not listed on exchange, worried about bag holders, this, that. It takes you away from building an actual product, an actual business, number one. Number two, when you're selling it to investors, there was a lot of non-ethical stuff going on, which is, they came in on this guise of, we're allowing retail people to invest in our company. But the reality was they were selling this token which had no relationship back to the equity or the ownership in the underlying entity. So investors are buying stuff here which gives them no rights, no ownership, no nothing back to the underlying operational entity. So what are you buying? You're buying fluff. So technically that can go to zero. So that's what's happening now. So we didn't want to do that to the investors because traditional investing, and this has been ever since the beginning of time, is this concept of skin in the game. If you're familiar with Nassim Taleb, he's one of the greatest options traders, and he's the guy who coined the term black swan and anti-fragile and all of that. His latest book is called Skin in the Game, and he talks about how bankers and the whole financial system is fragile because people don't have skin in the game. They sell things that, like a banker, for example, or a broker, they'll sell you a stock. They don't care if it goes up or down, right? And the same thing had happened in this ICO space. These guys came up with a token, they sold it to a bunch of people, and they didn't really care if it went up or down because they already got the money. And we didn't want to do that same thing to investors. So you got the complexities of managing an economy, the fact that you're selling something to people that really isn't ethical, and then number three is we wanted to steer clear of all the regulatory crap storm that was going to come out, which is, are you actually selling a utility token or are you just masking what is in effect security, what people are just betting on? Right. So we wanted to dodge all of that.
Do you think it's bad for the industry, these utility tokens?
I think they had to happen because it was something that we needed to experiment with. But all what annoyed me were two things. One, the talk of, oh, this is the new form of fundraising. I think that was a joke, number one. And number two was just the hypocrisy around, oh, you know, the bankers are bad. They sold all of us CDSs and CDOs and caused the financial crisis. Or the bankers are bad because they're printing money. And then these idiots came along and they printed tokens, which was just as bad.
What do you think is going to happen to these ICOs?
They're in trouble. I think from a legal perspective, they're in trouble. Number two, now that people have realized that, you know, the market's melting down, the first thing they're going to run out of is all of those ICOs. So all these people are going to have really bad blood from, you know, the people who invested in them. The guys who are going to try and convert the utility token amounts they raised into security tokens are going to have a really hard time because they're going to have to justify, you know, pre-money valuations of their companies that are extraordinary. Like if you've raised $40 million in a utility token, and you want to convert that to a security token, what the hell are you going to value your company at? What, $100 million for a beta product that doesn't even exist? Like, so I think that this, if people think it's been bad so far, I think it's going to get a hell of a lot worse.
Wow. With the popularity, I guess, you know, of ICOs going down, you know, what do you think's next? How do you think people are going to raise money?
I think
and this whole, I guess, you know, do you think security tokens is on the rise? Or
I think we're going to go back to raising money the way we've done it for the last 5,000 years, which is skin in the game. Is I have an idea, I will sell you a piece of my company or a piece of my idea. You as the investor get to share in my upside, and you also share in the risk on the downside. And then me as a founder, I have skin in the game. I have ownership in this entity. I take the money. You know, I build a normal business. Now, whether the funding comes in the form of selling equity via a digitized, tokenized version of my equity or version of my debt or something like that is highly likely. But what I think the biggest barrier for security tokens is digitizing the constitution and the shareholder register and all that sort of stuff of a company. That's the thing, because once that's digitized, then absolutely security tokens will proliferate. I think that's going to be one of the big things. But there's a lot of hurdles that need to be, you know, passed before we get there. Like Rick's doing some interesting stuff in Malta, but it's going to be a process.
Gotcha. Now a lot of people are talking about the ICO popularity going down, and it might have a negative effect on Ether's price.
Yep.
Do you think that's possible?
Well, I mean, we've seen it happening. So I think one of the big reasons why Ethereum sort of dumped so much is outside of just the general bubble unwinding and the speculative fervor being unwound. People who have raised money through their ICOs that held onto the Ether that they raised, that there's a certain point at which, and there's a hedge fund manager called, I mean, everyone knows Ray Dalio, or most people do, but you've got Jim Simmons, who's one of the most successful quant hedge fund type managers in history. This guy charges a 5% per month management fee and a 44% upside fee. It's the highest charge for any hedge fund, but people still give him money, and he doesn't take any more money because their hedge fund is so spot on. It's the greatest hedge fund in history. Anyway, what they talk about is this concept of when prices are falling, the holders that are holding, that they have a certain amount of pain that they can tolerate. And once the amount of pain that they can tolerate gets breached, then they're like, all right, I'm out. So I don't think we've seen that with Ether yet. I think a lot of people who raised money via ICOs, even in the earlier days, maybe when Ether was still $100, $200, $300, you know, those guys might only be down 20%, or they might be around break even. They're like, oh, it's still okay now. If it continues to fall, it might hit the point where they're like, all right, we have a treasury that we need to balance out here in real cash. We're going to dump. And I think that will have a further impact on Ethereum's price. I would not be surprised to see Ethereum go down to 50 US.
Now you made a comment on Quora.
Yep.
Joel, if you want to bring this up, in October, you said, should we hold our Ethereum or sell it now? This is October 2013,
Yep.
I believe. Oh, no, is it 13th of October? I am not sure.
Something like that. No, yeah, 13th of October, yeah.
13th of October.
This year, yep.
And someone for Bitcoin, if you want to stay in the market, otherwise sell it. You can buy back later if you really believe in it, but even so, it's not worth more than a few dollars per coin. In the near term, it will likely fall to $100 or possibly even sub 50 US. Longer term, its fundamental value is between 1 cent and $10. Now, obviously, that's a pretty strong statement. Why are you so bearish on Ethereum?
Look, Ethereum as a concept or as a thought experiment is a great idea. This idea that you can build a network for unstoppable programming. That's effectively what it is. And an example of an unstoppable program is these non-fungible tokens, these crypto collectibles that we talked about earlier. The ability for you to build an unstoppable program on Ethereum has no bearing or no relationship back to its token price. And in fact, Ethereum having a high token price is actually bad for people building things on Ethereum, because then the gas price is too high, so they don't build products on it. So it's got this natural ceiling, on it anyway. And what I generally tell people is whether Ethereum is $1 or 1 cent or $10 or $20 doesn't really take away from your ability to run programs on the Ethereum network. So the price doesn't matter. And where people get it wrong is that they think that all of a sudden, if all of these things are built on Ethereum, for some reason it's going to drive the value of the token up. Ethereum's also got a different inflationary supply than something like Bitcoin. Now, I don't want to be one of those Bitcoin maximalists that says, oh yeah, it needs to be a limited supply, because limited supply is just something, but Bitcoin's actually got a 21 trillion unit supply. People don't realize that. They keep saying 21 million, but it's divisible to 10 decimal points. So it's not so much about the limited amount, but that also does have a bearing in people's psyche. So my thing about Ethereum is the only reason its price will go up is based on this concept of a greater fool theory, is that people conflate the reason for its token value with the adoption of its actual network, when in reality, the ability to use the network and the token value on the network are not linked to the extent that people think they are. So, my comment to that guy was, look, if you want to be a speculator in this market, you're best holding Bitcoin because it's got the digital store of value prospect, not a token for the purpose of running programs on the Ethereum network. And if that's the reason you're doing it and that's why you're bullish and that's your reason for being bullish on Ethereum, it doesn't mean that the price should be high or low or anything. It can be whatever number you want.
Okay. Now, so one of your reasons, I guess, main reasons of building Amber was to get crypto more adopted. What do you think that needs to be done to increase adoption right now? What do you think the biggest barriers are?
3 things. Adoption will only increase for anything when there's trust involved. So especially when it comes to something like money, the only reason you trust your Australian dollars in your wallet is that if I give you $10 worth of money, you trust that you'll be able to maintain that same purchasing power when you want to go buy a coffee or whatever, right? So we have this consensus of trust. That's how money functions, and that's what these crypto assets are trying to function like. They're trying to be some form of money. Now, first of all, we need better on-ramps, and this is what we're trying to do with creating a micro exchange, call it that, is we need to make it easier for people to move fiat into that. Number 2, you need better wallets and better infrastructure. So once you're inside the network, it's easier to do things in it. And number 3, better education around what this stuff actually is, so less speculation and all of that. And then number 4, which usually wasn't in my, usually I used to talk about better on-ramps, better infrastructure, and better education. But I would say number 4 is also less craziness like what's going on with this Bitcoin Cash mess. Is if you take my first point before about money being money's not an object, money is a social consensus. It's a social contract, that's all it is. It's a way for us to cooperate if we don't know each other. That's all it is. If we take that as the definition of money, the predicate is trust. And in order to have trust, you can't have what's going on with Bitcoin Cash. It throws the whole thing out the window. So if I was to say 4 things, on-ramps, infrastructure, which is where wallets come in, better education, and less dumb stuff like what Craig Wright and all those monkeys are doing over there.
Cool. Now, you've been in the space for a while. What sort of got you involved in cryptocurrency?
I love the idea of this, something new being created that is at the nexus of computer science, of game theory, of psychology, of markets, of money. It literally brings all of these things together. It's not one thing. And this is why it's so hard for people to really wrap their head around what the hell Bitcoin is. Like, it's not just, some people call it just a technology. Some people call it just, it's just money. Some people call it, it's about smart contract. But it's not any one of these things. It's literally, it's this social, computer science, technology, money, experiment. It's what it is, and it takes all of these disparate things. And for me, all throughout my life, one, I've always been a contrarian, and I love the fact that Bitcoin's just this contrarian bet against, you know, traditional financial infrastructure. So that, you know, is something I like. But number two is I've studied, you know, psychology. I've studied biology, anthropology, science. I love that sort of stuff. You know, I've been in tech for a while. So, and I'm a massive student of capital markets, money, and all of those sorts of things. So for me, this is like, I'm like a kid in a candy store. I get everything that I want in one place. And this for me is what drew me to it and what's going to keep me around.
Very cool. And I guess let's talk about Bitcoin for a moment. What's your current, you know, sort of take on Bitcoin, you know, in regards to, you know, its value proposition, its adoption, and because that's really what we're, you know, there's real centerpiece right now. Yep. It's being, you know, all these other coins are being tested as to what is actually the reason for them, what's the value proposition. But Bitcoin is you know, it's got that Lindy effect. It's 10 years old. Yep. I think the euro is, I think it's 12 years old.
16. Yep.
Is it 16 years old?
Yep.
So Bitcoin's kind of close, right?
Yep. Yep.
Yeah. What's your take on Bitcoin?
Look, I think it is by and large the place, if people want to accumulate or want exposure to this asset class, it's the first place they should put it, and it's the primary place they should put it, number one. But if we look at it, just like you said, the Lindy effect, you've got multiple network effects happening around Bitcoin. It's becoming industrialized.
Do you want to just give our community as well, just what is the Lindy effect? Alex, can you just give a quick introduction of what that is?
It's kind of like a it's a recursive. I'm trying to think of the easiest way to explain it. It's. Do you have a?
Well, my shorthand, and maybe correct me if this is the way I think of it, is like however long a technology's been alive is probably how long it's going to keep being alive. So like the fork's been around for 4,000 years, 10,000, 20. I don't know.
Who knows?
But and chopsticks have been around for ages, right?
So they're not going away. Okay.
They're going to probably be around for another double of that time.
Yeah. So
the longer a technology survives as being used, the longer it's likely to continue.
Yeah. So where I was talking about recursive, and it's kind of what that means is the existence of it is a predicate for further existence, basically.
Yeah, that's true.
Yeah. Your explanation was better though. I generally complicate things.
The recursion is true, but right, it plays back into itself. But going back, you know, Bitcoin is Lindy effect. You know, what's your prediction and what's your view on its development and, you know, and its adoption going forward?
Look, it all comes back to let's take away all the fluff and let's look at it as its own digital self-sovereign bearer asset, which is another word for like a digital type of gold. You know, gold doesn't have intrinsic value. Gold, if we actually took away all the non-commodity value of gold would probably only be worth $5 or $10 in terms of its raw commodity value and how it's used in the industrial complex. But it's valued at, you know, what is it, $1,200 US because we imbue a type of store of value, you know, application to it. So if we view Bitcoin as a digital version of that, which is provably scarce, provably limited, unable to be manipulated or controlled by any single party. For me, if I'm a human being or if I'm an organization or if I'm a government or if I'm anything, the same reason as I would store gold in my vaults is the same reason why I would want to store this self-sovereign bearer asset that sits outside of that stuff that is uncorrelated to any other asset class in the world. And I might want to hold some as a hedge. Now, if you take the 7 billion people in the world and all of the money that's floating around and you say, all right, if a small proportion of that is going to come into this infrastructure, that is going to increase the unit value of each Bitcoin on the network. And that because there's this limited amount of it. So again, it's like buying domain names 30 years ago. So I just tell everybody, hold some Bitcoin, own some Bitcoin, accumulate it slowly over the next few years. If this thing works out and if this thing becomes some form of reserve layer for, you know, a parallel financial infrastructure, if it becomes this core chain that, you know, Lightning and all this sort of stuff is built off, that everything communicates with as a single source of truth, one Bitcoin could definitely be worth $500,000, $1 million, $2 million, whatever, and you will, I think, be glad, you know, buying it at whether 5,000, 10,000, 1,000, who really cares? There's an accumulation phase.
Makes sense. In terms of coming up, what are you sort of seeing in the markets right now? Where do you see the markets trending towards?
Look, I think in the short term, lower, because I don't think the people that have been involved, at least a large part of the people that have been involved for the last 9 to 12 months have primarily been ICO, cash grab type of get rich quick type people. Now, there's nothing wrong with that. There's always going to be speculators. That's fine, and power to you if you've made money. But I think what's going to happen is a lot of them are going to look for volatility or the ability to make money elsewhere. So they'll start to unwind their stuff. And the people who, just came in it for quick money and realize that there's no quick money in it will move out, and the thing's going to continue to fall. So I think, and also having been around, like I experienced 2008 firsthand. I was a trader in 2008. And I saw what that market was about, and I saw how long the bear market lasted. I traded silver and gold in 2012 all the way up. I sold silver at 49. My brother and I made a really good profit on running that account with our precious metals at that stage when we thought, oh, the world's coming to an end. The US dollar is going to collapse and all this sort of stuff. And I saw how long that bear market's been going for. So the bear market will continue. It was the same thing with Bitcoin in 2013-14 after Mt. Gox. So the bear markets continue longer than people expect because the people who got in on the way up have that pain threshold, that pain barrier like I explained. So my 2 cents is that we'll probably see an extended bear market, definitely into the first quarter and second quarter of 2019, and it'll just sort of peter on and people sort of lose interest. Maybe end of 2019, we'll start to see a pickup again, and probably strength in 2020. And the next cohort of people that came in since the last cohort is going to be a power law above. It's going to be 10 times as much, just like the previous run was 10 times as much as the previous people and 10 times as much as the previous people. So it's growing by orders of magnitude every time. So if, again, if I was anyone, not financial advice, but between now and 2020 is a period of accumulation. And I would be accumulating Bitcoin.
Any favorite coins or projects at the moment?
Yep. Well, obviously Bitcoin. I love the concept of Monero because I think private money has a big place in this world. I mean, it's the whole reason why the Canary Islands and BVI and all these sort of things exist, right? I mean, no one's going to give up private money, so I think that one's an interesting one. Outside of that, look, if we're going to bet on this concept, and this is where there's a caveat to what I said to that dude on Ethereum, is that as long as people conflate the speculative representation of value with the real amount of value, something like Ethereum won't go down to 1 cent. So I spoke about the fundamental value, so I was really clear in saying, look, that's where the real value is, but where people are going to price it is a completely different story. So Ethereum could go back up to $100, $200, $500, or $1,000. So out of all of those things, if I put my kind of speculative hat on and say what has good potential for a good story for people to believe in and sort of go behind, I think Cardano is an interesting one because it's sort of next version of Ethereum. There's obviously the way they're marketing Cardano as this peer-reviewed scientific version of Ethereum that can do all this sort of stuff, blah blah blah. The fact that they've priced it at such a low amount, like in terms of per unit amount. People, again, they're like, oh, Bitcoin's $5,000 and Ripple's only 20 cents. Maybe I'll buy Ripple and it'll be worth as much as Bitcoin. So that same mentality, although it sounds stupid, the less sophisticated the people are who are investing or buying this stuff, that's literally, they make decisions off that. And so Cardano's got that tick to it as well. So if from a speculative perspective, I think that one has an opportunity.
Makes sense. Now, at midnight this year, 12 o'clock, the clock strikes, ding.
Can I see my chart?
Yeah, you can see your chart.
Let me see.
Trying to get a prediction from you for in US dollars, the price of Bitcoin. Everyone who's come on the show has made a prediction. Keen to hear your analysis. So 31st of, I believe, December 2018, 11:59 and 59 seconds, I guess. Joel, have you made your prediction? No. Are you storing it up? The Joel prediction, is it coming?
Man, it's a tough one. It's my
Alex,
gut
your
feel,
prediction.
My gut feel is that we're gonna have a small Christmas rally just because people are happier in Christmas. Somewhere between 3 to 5. I think closer to the 3 than the 5. Call it 3.5, somewhere in there.
3,500?
Yeah, let's do that. Yeah, sure. Why not? Let's do 3,532. Why not?
$32. There it is.
Pulled it out.
Awesome. I love it. Awesome stuff. Aleks, if you can, if you get that on the money, I am like, I will. That's a lot of like respect. That's the lowest we've heard on the show
Oh, really?
today. Yeah.
Okay. All right.
Joel, is that's got to be the lowest, right? That's up there.
Yeah, I think that's definitely. I think it's the lowest.
Yeah, it's good fun.
Yeah. Well, let's see if this capitulation continues. It wouldn't surprise me, but who knows?
We'll see. Guys, we have launched a new page on Finder talking all about cryptocurrency trading bots. Have you ever used a trading bot, Aleks?
Nah, I looked at building one a little while back, but you're competing against guys with lots of money and lots of tech that can build really, really, really good stuff. You know, especially when you look at the space outside of crypto, like the bots and the algos that the guys like hedge funds like Dalios and Jim Simmons and everything build. You know, we can't match that stuff. You know, maybe there's scope to get an edge in the crypto market, but yeah, not my kettle of fish.
Well, understand. I guess, yeah, this newest comparison we've brought out that compares the crypto trading bots. Got different prices, different exchanges. Very interesting in terms of some of the strategies. Some of them are built in. This is some really, really intense guys. I met the guys from Margin when I was in New York. I think I've tried Profit Trailer for a little bit. Very interesting. All sorts of.
How'd you go?
I don't think I did too well.
No?
I think it was no. I think because I'm probably too noob at understanding how exactly it works. But
Yeah. Okay.
didn't do terribly well, unfortunately. But maybe there are people who understand that and a bit more. I think you'd be really analytical, with that kind of stuff and really on it.
I mean, I'm assuming it's going to say on there, but do they work more off like arbitrage between exchanges, or is it more about looking at patterns and trying to automate that process of buying, selling, and doing high frequency stuff?
I think there are a number of different strategies as to how they employ them, and I think a lot of those are like there's all sorts of different ways of doing it. Again, not my area of strength, but I think this guide will help everyone sort of trying to make a decision on that. Lastly, we do have a guide from Onion to blockchain. It's a bit of comedy.
This one's great.
And so some of the here are the questions. How does blockchain work? Do you want to talk science or do you want to make some fucking money?
Wait, there's one that's a little bit further down.
Who uses blockchain? Ordinary folks in charge of $1 million cryptocurrency accounts and diamond supply chains.
The benefit of using blockchain.
What is the benefit of using blockchain? Provides a more efficient way for you to lose all your money at once. Is the system is the system fully secure for hackers? Nothing that bad has ever happened yet, so we're just going to say yes.
Sure, why not?
Yeah, so
These are classic. These guys are great.
These guys are pretty funny. All right, that is wrapping up today, guys. Do follow Aleks for his launch coming up in a couple of weeks. You can see his Twitter handle just down below, and follow along and get on board with Amber, which is really cool. And do subscribe and do follow us, guys. On you press the bell to subscribe and press the little bell button to be notified about each of the shows. Ooh, that one right there. All right, guys, we'll see you guys tomorrow, if not the next day.
Adios.
Yeah.